Welcome to the In Early podcast, where I speak to those at the forefront of the digital assets and technology sectors, telling real-life stories, considering the growth and growing pains of the industry, and exploring how blockchain and other technology has made an impact on people's lives. My name is Matt Green, and I head up blockchain, digital assets, and technology disputes at law firm Lawrence Stevens. This week, I speak to Ben Elvidge, product lead for xU3O8, a real-world asset tokenization outfit for uranium. Their token, xU3O8, is designed to open up an unenriched uranium market, offering custody-ready commodities for investors. I hope you enjoy.
Ben, thanks for coming down. Thanks for having me. So, in the summer of this year, we hosted an event at these offices with 70 representatives of the Crypto Collective, Eva, Lawrence of Figment, and yourself to talk about this project and how this all works. And it was honestly one of the best examples of how real-world asset tokenization, to my mind at least, works. And today, for me, is a follow-up to tell people at large more about the xU3O8 token and uranium.io. So on that basis, let's start with uranium itself. Talk us through the science of uranium, in particular how uranium oxide as an investable commodity and what yellow cake is.
Yeah, so that I'm relatively new to the uranium market. I'm not by any means a uranium expert, but have a TradFi background, so familiar with commodities in the broadest sense. So uranium is actually, surprising to me, was pretty abundant out there. So uranium is an element. What you care about is two main isotopes within that element. So uranium-235, which is the fissile material, and then uranium-238, which isn't, but could be turned into plutonium. So the reason that's important to note is because uranium is the base input into nuclear fuel, that then powers nuclear reactors, which is the big thesis around why uranium is interesting from an investable perspective.
Okay, and what's uranium oxide like? I know through some of your material that was quite an important thing to talk about.
It's really important to talk about. So in terms of the process, uranium, as I said, is fairly abundant around the world. Typically it's mined.
It's Australia, isn't it, mate?
Australia, Canada, Kazakhstan are some of the big producers. Russia, of course, but we don't really deal with Russian uranium anymore post the sanctions. So it's processed by being extracted out of the ground, so mined, and then it goes to a facility called a converter, where it's milled, and that's the technical term for it, and turned into uranium oxide. So that's U3O8. So again, that's the chemical compound, and that's what's known as yellow cake. And so yellow cake is fairly low radioactivity, fairly fungible as well, which makes it interesting when we talk about tokenization, and then is barreled up and stored in one of these three secure facilities. Or multiple secured facilities, but run by three companies that are regulated. So one in Canada called Cameco, one in the US called Convidine, and one in France called Orano. And so when we talk about physical delivery and owning the physical commodity, actually what it is you've got a converter account. So you have an account with one of these converters, and there it's stored at that facility in barrels. And then when needed for processing, which is the next stage of being enriched, that's to turn it into nuclear fuel, and it gets turned into fuel pellets that can then be used in reactors. And so what's really important when we talk about uranium, and I'm doing a lot of this because I was in the US a few weeks ago, and when you talk to them about uranium, given the recent news, they're like, is this safe? Actually, the distinction, and what we've made a big distinction in the report too, is U3O8 is the intermediate step between being mined out of the ground and then enriched and turned into something that's radioactive nuclear fuel. And obviously then what you want to do is take it that step further if you go to create nuclear weapons. So in terms of the physical commodity that's been tokenized here and made available here, it's U3O8 or yellow cake, which is the sort of trade term for it.
Pre-scary stuff.
So pre-scary stuff is a good way of framing it. And so that plus the fact that physical delivery means, yes, you have it in your converter account, and yes, it's in barrels physically somewhere, but it's not like you can back up your truck to Cameco and say, can you pop the yellow cake in the back of the truck, please?
Hard cut there. That's a great answer. I just want to make sure the camera's on. Power mode. Sure. That's running. Good answer, mate. Thank you. All right, Luke, we're going to cut back in. You ready? So when people think of uranium, right, they think of nuclear facilities, as you just said, enrichment, sometimes even, Iran and sanctioned entities. So what's the difference between the fuel and the commodity?
Yeah, it's really about that processing step. So the commodity, pardon? So the milling is to turn it into U3O8, which is the most tradable aspect right now. So that's when we talk about trading uranium, and in the current TradFi world, that's really what people are trading, and that's what the big closed-ended investment trusts are buying and having ownership of. In the case of the Sprott Physical Uranium Trust or Yellowcake here in London, that's listed. So that's, again, I think pre-scary stuff was a great way of framing it, because it's the base input that's turned into nuclear fuel that's then used by the utility providers, like, that run the reactors. And so actually the reason it's gained traction, not huge traction, about 55 million pounds in weight, so LBS of uranium was traded last year in the spot market. So it's not a huge commodity market like gold or oil yet. We hope that we could get it there because it's of such importance. But people aren't trading the enriched version as much because, as you would expect, and as we go on, that's very highly regulated.
Yeah, okay, I understand it. And one of the phrases that you used in the talk that we had and just now, and this is worth explaining, is Sprott.
Yeah.
What is that about?
So Sprott is the name of a company. They have a series of closed-ended investment trusts and ETFs where they look to bridge, go on that journey of bridging physical commodity ownership and physical commodity markets with retail investors and making that more easily investable. And so the Sprott Physical Uranium Trust has about $5 billion of assets. That is the biggest vehicle out there to gain exposure, in theory, to physical uranium. But there's a few challenges that we see with that, which is why uranium was interesting to tokenize, right? Is one, because it's closed-ended, unlike other ETFs, there's not that creation and redemption mechanism, so you can't keep parity with NAV or the net asset value. And so actually today it's trading at about a 6.4% discount. Since it's launched, it's been about 5.5% discount on average to net asset value. That in of itself, if you're just looking at price return, is okay. But if you're looking about from an asset allocator's perspective and trying to get exposure to the fundamental characteristics of uranium as an allocation within your portfolio, you want it to be as close to the price as possible of the underlying market. And so that's one of the challenges. But they've got about $5 billion in assets in the Physical Uranium Trust.
So they're already very much part of this world. Are they a competitor, or are they somebody who you're working with?
So I think it's hard to say, given their scale and our scale, that they're a direct competitor right now.
Yeah.
I think for me, at least, they very much led the way and showed that there is demand, and that's super important. If I put a product management hat on, that's, there's good evidence there to say that there is demand and an opportunity for product market fit there. I actually think what we're doing is moving that market forward.
Well, let me ask that question then, because you are tokenizing uranium, Yellowcake, as we spoke about. What was the problem that you were trying to overcome?
Yeah, so I think it's a great segue into it, because you've got, on the one hand, you've got these closed-ended investment trusts. So Sprott's the biggest. There is a listed version, or not version, but a different company listed on the LSE called Yellowcake that has the same problem in terms of trading at a massive discount. In addition, we ran the numbers, because why wouldn't we? When you look at the correlation of returns, and because the price is obviously the price of a unit of or share of the investment trust, it actually isn't that well correlated over the last 3 years. So the correlation's about 0.06, which basically means there's not much direction with the underlying spot price of uranium, so if that's the primary objective, it doesn't really meet that. So that's one option. But we think our view is that it's been predominantly used as an expression of nuclear sentiment, of uranium market sentiment, rather than actually an effective tracker of the underlying spot price. The other problem is, if you're a participant in the nuclear supply chain, you can't take physical delivery. So you can't redeem your shares of the investment trust and take physical delivery of Sprott's inventory, which then leads to the other option that you have if you've got a cool $7 million to trade in the spot market and take physical delivery. The problem we're solving there are really those barriers to entry, which $7 million because it typically trades in £100,000 in weight lot sizes.
So about you, but I can't afford £7 million worth of.
No, not yet. Hopefully we read this as big as we think it can be. Maybe one day. But so that's the starting point in terms of those barriers to entry. Secondly, you need to have this converter account. There's a lot of operational setup, a lot of checks, and actually it costs you about $20,000 a year at least to sort of maintain that account.
So that is essentially the participation fee, be able to make sure that you can trade this.
Yeah, and then store the physical uranium. And then secondly, that minimum lot size doesn't just apply to you making the purchase, but if you then want to get out of that position, you've got to sell it all, or you've got to have enough that you can trade it in those minimum lot sizes.
I guess you've got to know the market well enough to find out who wants to buy off you and make sure the person who does buy to you and sanction.
Which is the problem with a lot of commodity markets, is that it's OTC, and therefore the pricing, you're subject to, brokers being transparent. There are a couple of price speeds out in the market that are done, again, to go back to TradFi, similar to sort of other benchmarks in terms of LIBOR and things, as was, where you take voluntary disclosures from brokers and then you come up with a price at the end of the day. So that is used right now. So you have a vague idea, but yeah, that opacity of markets and it all being OTC is another real problem. So actually, when you take those problems in aggregate, it's a really great candidate for tokenization, because you can fractionalize it and take that entry point. Like if you wanted to buy one xU3O8, which is the equivalent to beneficial ownership of 1 ounce of uranium now, you can do that for $4.50. So there's entry barrier doesn't mill. You don't have to spend a several
20 rand on the top.
Exactly. And you don't have to deal with any of the operational setup unless you wanted to take physical delivery, and we can get a little bit more into that.
So the problem to my mind then is the reason why this has been set up, or the problem that you found is retail or even just normal parties who may want to invest in this commodity can't do so because the boundaries or the hurdles are so high that you just cannot participate at all. Is that?
I think that is, it's the first sort of foundation for any tokenization project, that you want to make sure that actually it's not just tokenization for tokenization's sake, right? Because it's like slapping .com in the early 2000s on top of everything, right? Doesn't make it so.
Yeah.
And so we felt that using tokenization here is a really great way to move the market forward. But secondly, it's also something that, and even when we first spoke, everyone has a reaction, positively or negative.
An opinion.
And it's a technology flavored commodity that is super critical. And actually it's a good way of expressing that interest on nuclear and the importance of nuclear, because it is, as we talked about earlier, the base input for nuclear energy, and the only base input for nuclear energy. If you want to power a nuclear reactor, you need to have uranium.
And there's nothing else that you can use.
Exactly.
Right.
And so it's a great way of doing that. And so on the one hand, you've got the fundamentals to why you should tokenize, which is a good opportunity to move the market forward. On the other hand, you've got an interesting commodity that is aligned with the current sort of majority views, I would argue, within the Web3 ecosystem, right, of people that are more technology oriented. And so a technology flavored commodity seems to fit that as well.
Well, that brings me to the next question, because is there genuinely, I know I've read yours and Stephanie's articles and research pages on it, but tell us, is there a real appetite for people holding uranium?
I think, I could come back to the similar points, but the only real driver you've got is what's going on in the existing market, right? And you look at something like Sprott, which is, there's the Physical Uranium Trust. They've got $5 billion in assets. It was as high as $6 billion earlier this year with the market movement. You look at that and you go, well, that's not an insignificant market. Yes, it's not as big as the gold or the oil markets, but that's another factor as well, is that because of those barriers to entry and there isn't that many products available, financial investor or purely financial participation in the uranium market is about, depending on what you look at, between 15 and 25%. Compare that to oil or to gold, where it's closer to 55, 60% participation. There's a long way to go in participation in the market. So we see some of those early demand signs. We're fortunate that for the project, we've got some great partners that are already operating in the physical market, like Curzon Uranium.
Yeah.
And so we kind of take that lead. but yeah, we are at the frontier, right? And there's this sort of, it's a new product, it's a new thing to do. It's unlike many other tokenization projects, which is both a positive and a negative.
Positive, Berners.
Yeah, but people can get their head around real estate. People can get their head around that kind of stuff.
Tokenizing racehorses is always one I've heard of.
Yeah, or that kind of stuff. It's a bit more easy to understand and those dynamics.
For the fungibility of uranium makes this a lot easier, because when you fractionalize and then tokenize real estate or racehorses, if you want to sell the whole thing, you have to sort of almost put them back together again. Whereas in this, because of the fungibility of uranium, you don't need to do that. You can own a
exactly. And the other bit is, that almost gating point of the converters is really interesting as well, right? Because we don't run into the problems of hundreds or thousands of individual uranium dealers that you're buying the physical from, because it all has to be stored and held
by a third party.
And so, honestly, we get the question, not a lot, but we do get the question of, well, how do you know it's of good enough quality, the yellow cake that you have in your reserves? And we're like, well, Cameco have given us a statement and told us that it's there.
And I did their facility doing this before you existed.
Correct. And so this is where we're bridging and plugging into those existing rails and frameworks, which, I can't speak to, as I caveated at the top of the conversation, right? I'm not a nuclear expert yet, but I'm well on my way, I hope. But, that is an industry problem. If we can't trust what Cameco or Orano are doing, the whole industry of this critical energy source is going to fall apart. And so that, again, plays into some of the strengths of why it's a good asset to tokenize.
So I was looking at some of the marketing material, and it refers to the xU3O8 being a, quote, custody-ready asset with global pricing benchmarks, end quote. So taking each of those 2 points in turn, what do you mean by custody asset ready and then global pricing benchmarks? So first, custody asset ready. This feels like I can take it home by that language.
Yeah, but I think, and you can't take it home, as we keep coming back to, and it's really important I emphasize this. But what we do mean is, it comes down to that the F word, so fungibility. But it is, you do have secure and standardized storage, right? Which is important because you're able to point to it and point to a verified third party that is storing that and giving you statements, and that's really important when we talk about the legal structure of the token. That because it enables it to create and then verified ownership is super important. So we know that there's quite sophisticated book transfer management systems at Cameco who we use, but there's other converters as well. And that because of all of that, it's easily auditable, which from a custody perspective, even just taking blockchain aside, from a financial investment perspective, you want to be able to have verifiability, auditability, but also that it can be stored and you're not dependent on this esoteric asset having some kind of reasonable valuation metrics applied to it. It's a well-known kind of product and there's well-known standards for it, and they're maintained by these converters. So when we say custody ready asset, we mean it's something that can be custodied and already been proven that it's being custodied and verified by the existing TradFi products that are out there. So that's, we're not talking about
you're taking it home.
Taking it home. We're not talking about, some sort of financial contract that we're tokenizing that gives you uranium in the future.
It is a matter of there is a custodian that is holding this already.
Correct.
Okay. And the second word was global pricing benchmarks. What did you mean by that in this context?
Yeah, so it comes back to some of the points we mentioned. There are a few different firms out there, so Numerico, TradeTech, UXC, that publish benchmarks daily. And so, again, what we're really getting at there is that this is an asset that, yes, it's opaque, yes, it's OTC, but there is a reasonable third-party price source for this. And so it's not a purely speculative asset that's driven right now by supply and demand of the xU3O8 token. We hope in the future that we stay close enough in price parity and there's enough volume and demand from the right kinds of participants.
Yeah.
That we can get there and xU3O8 becomes the price. But right now there is a reasonable basis for saying our xU3O8 price is, $71.2 per pound equivalent, and the global benchmark price from one of these three providers is $71.3. That's super important for us because it gives confidence and it also gives a reason to trade it, right? It just classic market
Well, you can see how much it's gone up and down. But the point about benchmarks is you're able to make an assessment on whether this is a good market, whether it's a good time to buy it.
Exactly. And then you get people who are looking to profit from that price disparity, if there is any. And that's why, again, it becomes such an interesting asset to tokenize and a relevant asset to tokenize for so many different audiences, whether that's individual investors or, as we're talking to, hedge funds and family offices and the like.
So we were about to lean on this question before, and I was glad that you didn't get too much into it because I want to ask it specifically. But what rights, if I buy your token today, what rights do I get? What does the token give me?
Yeah, this is where we and our general counsel would be very proud of it. I think this is where we have moved beyond what tokenization looks like. So just to zoom out a bit, what I saw a few years ago was everything being tokenized, right? But that really was, you wrap an SPV around it, the SPV holds the assets, and then you tokenize the shares of the SPV. Mm-hmm. And so actually what your token in that instance is you're essentially a share, just on chain. What we've done here is use, not to get too technical and boring perhaps, but English common law trust frameworks and say, well, actually, the trustee holds the assets on behalf of the beneficial owners. Mm-hmm. And in this case, the beneficial owners are registered by their holdings of xU3O8. So xU3O8, if you hold it, is your registration or certificate of equitable interest or beneficial ownership interest of the physical uranium. Why that's super interesting is because, blockchain aside again, there's already existing precedents, I'm told, again, not a legal expert, that you can assign your equitable interest in a trust to another person with a written instruction and a signature. Mm-hmm. And for anyone that's in the Web3 space, that sounds very familiar to an on-chain transaction where you create the instruction, you sign that with your wallet. And so in that instance, applying those same frameworks, what we've been able to do is take £100,000 of physical uranium that's held by our trustee, which is Archax, who's FCA regulated. So again, super important.
Archax is acting as your trustee.
Archax is acting as custodian, and they present the trust deed as part of that. And so we were the first party to enter into that trust with Archax. And so we did full KYC and things like that, which we'll get onto, which is interesting. But then the beneficial owners are the token holders. And that's super important from a legal perspective as well, because unlike other tokenization projects, and rightly everyone's concerned about rug pulls and things like that.
General pros that you get, give me your money, I'll look after it for you.
Indeed, is that one, they're FCA regulated, so it's a business risk to them if they don't do what they're meant to be doing. Yeah. But two, the structure means that it's insolvency remote, because if you rock up with your xU3O8, you've got a claim on the underlying assets of the trust.
And a trust is a scary. I remember in law school, they said if you're trying to avoid being a trustee, because there's a lot of duties and you are owing the beneficiary a lot of rights. So the fact that it is set up like a trust falls in line with the normal common law situation, whereby trusts are enforceable from hundreds of years of case law. So in that respect, I guess what you're doing is you're updating or using new tech, relying upon old law.
Yeah, and look, it happens with existing. So I come from an asset management background, right? So it happens with existing products. You have a register, you take any sort of mutual fund, exchange traded or otherwise, you have a register that's held with a transfer agent. That transfer agent has to operate within a regulatory framework in keeping that register of shareholders accurate.
So if I was going to ask again the question, what rights does the token give you? In one sentence, and correct me if I'm wrong, it is the beneficial right to the uranium as part of a trust.
Correct. I think that's exactly right. And that's why, again, another reason that's important is because unlike some other tokenization efforts, that's why you can then take the physical delivery. So it's manual right now, because again, we're on this journey where we're iterating and improving our product, but you can instruct us and Archax to redeem or burn your tokens, your xU3O8 tokens, and deliver the physical material into your converter account.
Right. The converter account bells out and deliver it to your house.
Yeah, and no, exactly. And that's kind of critical, is that I'm not sure we'd have been able to get this project away in the structure that we've been able to do it.
Yeah.
If there isn't sort of that secure storage aspect,
Which I could absolutely not.
that is that gating item, right?
Why would people do that? Why would people ask for their uranium to be moved to their converter of fab?
It's really when you get your participants in the current supply chain, right? So, we've had some very early conversations, and I'm not giving away anything confidential here because they are very early conversations with junior miners and young mining companies that see the opportunity in uranium, have raised capital to mine uranium in certain locations, but that mine's still getting up and running. But they're sort of eating their own dog food by using the tokens because they can buy physical uranium now when they believe the price is lower than it should be.
Right.
That's their view.
Yeah.
And so actually then what they'd want to do is if there's any shortfall from mining production and they've got a contract to deliver to a fuel buyer or a utility provider, they can physically redeem the tokens and deliver that material to the utility company. And so using it almost as, before futures and forwards and they're almost locking in the price now for physical delivery later.
Okay, so in that respect, it's very commodity driven.
It is very commodity driven. And I think it goes back to my earlier point is that why it was so interesting is it's an opportunity to move a commodity market forward and make a difference. And, ideally we want these participants in the beyond the brokers, the actual miners and other people in the supply chain to be seeing xU3O8 as a mechanism to sort of benefit from short-term price depressions in the market, whether that can or otherwise.
Because that is an important point. I'll come to this. It's a mechanism in order to participate in this market.
What I want to talk to you about now is about how you stop uranium falling into the wrong hands. Because when people hear uranium, they think it's going to be sold to sanctioned entities or individuals. How do you stop that happening?
Yeah, so it's worth probably separating between kind of where you can get xU3O8, right, as the token, and how we deal with that differently. And so our first launch was in December last year, but that was our uranium.io platform. So that's very much coming to us, and you're signing up with us directly, opening an account, which is very, very straightforward. And then we've got certain obligations there. And so in that instance, we block sanctioned countries from even accessing the site and even accessing the app.
So geo-blocked.
So geo-blocked entirely.
Not a VPN, you can get around that?
We use, in theory, we do what we can.
Yeah.
But then more importantly, when you come in through uranium.io, it's a super simple sign-up process where you either connect your wallet and then add your email address, or you sign up with an email address and we can provide a wallet from a third-party provider. Really straightforward. But then we do sort of on-chain analytics that screen that wallet. So if you connect it, which is more important when you're connecting a wallet.
Yeah, you're connecting a third-party wallet, you need to know.
So we need to know what this is sort of activity. We've had a few instances of that where that's been flagged, and then we have to take additional.
You're doing it yourself.
So we have an outsourced third-party compliance provider, which I didn't know existed until we did this project, but that's super helpful.
Yeah.
And then they, this is the great thing about being on chain is all activities searchable and programmable, which means we can actually flag it there. The other places you can buy it is on exchanges. So we launched almost 2 weeks ago now on 3 exchanges in parallel. So Gate, KuCoin, and Mexi. And they're obviously abiding by local rules around KYC, so on and so forth. But we still screen every wallet at contract level with these on-chain analytics.
So, and again, you're doing a very good job of setting me up for my next question. You've done this before.
But how does this meet some of the regulatory compliance? And I guess, or how do you do KYC and AML? And the answer may be, well,
You don't have to do it. It's the market makers and the exchanges who need to do KYC on their end. Is that right?
So they do it. So obviously, and then we do it, and we've got our whole policy around this, right? And it's in the terms of service on uranium.io, is we feel that we actually, because of that trust framework, we don't need to KYC every individual, but we don't want to be dealing with sanctioned individuals or high-risk individuals. And so we've had, a few thousand sign-ups. Of that, maybe 4 we've had to do KYC on.
What triggers a KYC about?
So there's a whole bunch of different activities. So if they've been interacting with protocols and exchanges that are in sanctioned jurisdictions like Russia, if they've been, interacting with mixers and things like that. So it's generally around the wallet activity.
Okay.
And then at that point, if it's high risk, as deemed by a prescribed score that we have that's internal, then they can do further investigation, or if it's really still high risk, then we do KYC and we send them a KYC request, and then they fill that out, and it's either mitigated or it isn't. And so what we are doing is creating more operational work for ourselves and our partners.
It's eco-steering in this industry, isn't it, unfortunately?
And people don't like it necessarily. The real degen crowd don't necessarily like it when you have to do this, but if we get someone that is high risk and then won't do KYC, or is high risk and then there's no mitigating factors when we do KYC, it's good business practice that we have to file a SAR and do all the other.
Yeah, has to. So with the event, because there's two ways that you do this, right? You can, because I've been on the Uranium.io website, and I'll ask you more about that in a minute. But you can do it two ways. As you say, you can add your wallet. In that case, you can check the transaction history of that wallet, and you would operate. If you are a sanctioned individual or connected to, and they sign up without a pre-existing address, i.e. you generate one for them, how do you get around that instance where they are sanctioned?
Yeah, so we can only do what's within our ability and feasible from a technical perspective. So that's where things like the geo-blocking comes in. And then we have ongoing monitoring that we've implemented on an automated basis to make sure that...
Does Archax have to do any of the KYC? I suppose to someone said...
So Archax do KYC in a few instances. So they obviously did KYB on us quite significantly, as you'd expect. And then if you wanted to take that physical delivery step, because you're removing assets from the trust, you'd need to do KYB or KYC with Archax at that point.
So as soon as you want to take delivery custody of it, then that triggers an immediate auto AML KYC.
Correct. And then, or if the really interesting piece that we've been asked about very recently is, what if you've got an existing inventory of physical uranium and you want to tokenize that?
Will you help someone tokenize their already existing uranium?
Yeah. And so again, you got to go through KYC and KYB.
Yeah.
Pretty stringent, of course.
Yeah.
And then assuming that passes, then you would transfer those assets into our converter account in terms of the physical material, and then we deliver the tokens into your wallet.
Would the uranium have to be delivered into one of those three? What was it, Canada?
Yeah, so also the physical movement is always done through the converters.
It's got to be one of those three converters.
So if you're one of those three converters, and so if someone says, I want to take physical delivery, but can you deliver it to this?
Or I've got loads of uranium in Iran. Can I tokenize it? You go.
Like, no, because we need an account number that then we can verify. And again, to your earlier question around how do you keep it safe?
Yeah.
That's that second level, is you'll have to do KYB to have a converter account in the first place.
Okay.
Because they're bound by, X number of nuclear proliferation regulations, and those guys don't mess about.
I guess the overarching thing really is everybody's trying to do their best to do AML KYC, and then there's third-party providers. There's only so much you can do, right? And ultimately, if someone wants a physical delivery, or not delivery, I know what you're saying, to the converters, that's sort of the dangerous bit, isn't it? That's the bit where things can physically become enriched, and therefore an automatic AML and KYC trigger is launched. So in that respect, you've mitigated where you can.
Yeah, and look, I think it's no surprise that we see the real opportunity in broadening participation at the financial end.
Yeah, of course.
I think I hope we'll see, I should say, big or sizable investments from participants in the nuclear supply chain and institutional investors that may at some point want physical delivery for whatever reason. But they're going to be few and far between relative to the broad activity that we're seeing already, and hope we continue to see, which is more individual investor participation.
So the overarching takeaway from me, at least, and from the event that we had earlier in the year, is that this is a way to trade, custody, speculate on uranium. I think when we spoke afterwards, it was, don't think of it like crypto. Crypto is sort of the means by which to interact with this commodity that otherwise wouldn't exist. So you guys, in theory, are providing the infrastructure in which people can trade, as I said, custody, speculate on uranium. Is that a fair assessment?
I think it's a perfect assessment, and it's exactly how we want people to think about it. Right? Is, again, I spent a decent chunk of my career to date in TradFi, and I think when sort of blockchain technology was first started being talked about, it was really in the context of the infrastructure and rails, we use rails a lot now for some reason, that can improve financial markets and financial market infrastructure. This is the perfect example of that, because actually the activity doesn't change. It's still spot commodity trading, which is an unregulated activity in most jurisdictions.
Okay.
So because we don't have that SPV layer, it's not a security either. So actually all we've done is take an activity that was done by a select few that could meet overcome those barriers and had the right connections and network or need in the case of people in the supply chain to participate, using that improved technology to broaden that participation. And now we're talking to distribution partners in exactly that vein. So we've got conversations with some brokers and neobanks and investment platforms. And the conversation is, well, you should think about listing this and putting this alongside your commodities sections rather than your crypto section, because that's precisely what it is. You shouldn't be talking about it as crypto. And in fact, that inhibits a lot of the conversation, because then you end up in conversations, well, it's not a volatile asset. It's got about the same volatility, maybe a little bit more than the S&P 500. We've not fundamentally changed there.
Okay, and one token is worth what of uranium?
So right now it's an ounce of uranium. So there is a dilution mechanism in there when we hit certain thresholds of demand to sort of cover costs and pay for the administration. But we've kept those low and, been very conscious that we have to at least have parity when we start charging those fees, for want of a better phrase. And it's all disclosed within our white paper. And we'll do that. And so after 12 months, you might have 99.4% of an ounce of uranium for a token, but you will always be able to relate back, and we always make it really transparent how much a token is worth in ounce and pounds terms, because if it's about changing the market thinks in ounces or thinks in pounds primarily. And so if you want to broaden that participation but also have the connection to the physical world, you've got to be able to make that the clear just end a clear connection between the two.
So looking at the wider picture then, and again, this was something that came up in the papers that we were looking at our event.
It says in the research paper, I would quote, 97% would consider using uranium tokens as collateral in structured products, suggesting that tokenization could unlock uranium's role in broader portfolio construction, end quote. Is this what you intended when you set this up?
I think so. It's a great question, because intended not as a first order priority, for sure. It was about, Trilitech is the R&D and adoption hub for the Tezos ecosystem. So all we want is people participating on chain, and we believe that markets and tokenized markets should happen on chain.
So just to pause there, it's all Tezos.
Yeah. So we launched on Etherlink, which is the EVM compatible layer 2 built on Tezos. And then I work for Trilitech, which is this R&D and adoption hub, supporting the Tezos ecosystem and building what I would consider to be cool things. I mean, subjective, of course, like this. But to answer your question, I don't think it was a first order priority to sort of look at these other products and the composability. I think it definitely was back of our minds from a Web3 perspective, given our origins within the Tezos ecosystem, that this asset, because of its fundamentals, I go back to the volatility point, is interesting to interact and have that composability with other DeFi protocols. Because, if you think about, I want to borrow USDC or USDT or whatever else, and I'm going to put collateral up. If you're the protocol, you want the lowest volatility collateral you can possibly have, right? And so if you're happy with taking, even the TradFi sense, if you're happy with taking an S&P 500 tracker as collateral, you should be happy taking uranium and as collateral, because it exhibits those similar volatility characteristics, notwithstanding the price appreciation dynamics, which who knows. So, I think from that perspective, we always thought it would have a role to play in the wider ecosystem composability. And we're hoping there's going to be an announcement on that actually later this month, which is great. But what we didn't think about is, how do we then reverse engineer, because we've got better tradability and transparency in the token now, reverse engineering that back into TradFi rails.
That's what
was not something that I anticipated. And so we're now having those conversations, because we've seen interest from hedge funds and family offices that are already buying into the nuclear thesis, and this being a great way to express that view, but don't like the physical, don't necessarily like what they're getting from Sprott, but then can't hold tokens within their Luxembourg fund regulation frameworks. And so actually, how do we create products now that give us what we want, which is increased TVL and or what we'd call AUM back in the day, back in my old job. But how do you increase TVL in the token while also creating and meeting the market where it is on the institutional side with products that they can hold within their existing fund structures, etc.
Because people I speak to often, when they create this product, it's all about sort of removing themselves from traditional finance. And then they find themselves wanting to get into traditional finance because TradFi is going, well, that is interesting and quite profitable. I'd like to add that to my portfolio. So I sympathize massively that there's this means to sort of get away from it and then revert back round. I want to talk a little bit about energy now, because your paper also notes the need to obtain energy from clean sources, given the rise of AI and power of data centers. It mentions in your report that Meta recently announced plans to source nuclear energy from a plant in Illinois for 20 years to meet AI needs. I read somewhere apparently saying thank you to ChatGPT is costing them millions. Being polite to the AI is costing them millions. And so there is a need to meet this energy demand. Do you see your token then having a role to play in all of this?
So for sure, it's a sort of step process, right? So talking about energy demand is the key thesis, right? And so not just at a governmental level, which also then intersects with this clean energy point, particularly if you go ex-US, in Europe and certainly some parts of Asia now, was the drive towards cleaner sources of energy, I think, is critical. We've had a long-ish hot summer here in London. And so, global warming, despite some of the noise within wider markets, I think is still on the front of, should be on, and probably is on the front of mind for a lot of governments. But also from a sort of just pure, as a lot of these tech companies are seeing it, right? And they're driving a new wave that is private company level in nuclear. They're just seeing it from a pure efficiency perspective, because nuclear, pound for pound, is one of the most energy efficient or efficient means of producing energy.
Which especially to what we got now, that we pay for energy in Europe.
Yeah, exactly, right. And if actually it's completely logical, because it was about powering, data centers and AI models that need to run 24/7 that are consuming more power. You need something that doesn't have that intermittent aspect, like solar, like wind. So nuclear is the only proven at-scale model for that. And so all of that bundled together, and it's not just Meta, right? Microsoft have funding the reopening of 3 Mile Island, as they announced at the end of last year in the US.
That was the documentary, wasn't it? 3 Mile Island, and something happened, I think.
Yeah, and so they're reopening that nuclear reactor with support from Microsoft, and then the other big tech companies have made investment in newer innovations in nuclear around small modular reactors. So the kind of train's left the station on the nuclear piece. And so if you buy that, then absolutely uranium becomes even more important. And so do we have a role to play? For sure, because this is, I would argue, one of, if not the easiest way to get proper exposure to that whole market, right, and that whole trade. Additionally, which is super interesting, it happened at the event with yourselves, is I had a very interesting conversation about someone who works in private equity, and they're funding data centers and people building data centers, which is, again, completely logical, given the trends.
Yeah.
And they see it as, well, uranium prices right now, market consensus is they're lower than they should be. So actually, would we be interested in talking to these firms building data centers as a means of them investing in the asset, as almost like an offset to sell forwards when the prices increase, and then offset their energy prices down the line, maybe even in the future, and I can't predict that. I wish I could. There's more vertical integration between energy, as we're seeing, right, with these investments from the Magnificent Seven firms, more vertical integration. So if you're in big tech and you want data centers, you want to control more of that supply chain, maybe you move more into energy. If you're moving more into energy, that's likely to be nuclear. Could you move one step further down the supply chain into uranium? Why not?
So this is a rebranding of uranium as a commodity from being scary and sanctions and all the other things that people worry about and create emotion, this is a full-on rebrand to something that we, it's an asset that people should be participating in via you guys or whoever else, and that has a role to play in the long term for energy consumption.
Yeah, I think rebrand, evolution of branding, I think it aligns with the wider sentiment, is that, you're kind of in this scenario where you need more energy globally for everything. And you don't want to necessarily do that via the sort of fossil fuel mechanisms. And so that really only leaves you with nuclear. And so that wider sentiment and perception piece has already changed. And I think that's why we've had a good time for launching this product.
Yeah.
But absolutely, we want people to see this as an asset like any other asset they would allocate to and buy from whatever trading platform they use. And it can be a critical part of their investment portfolio for the long term, or maybe some more short-term speculation. And no one's ever said having more participation in the market is a bad thing, right? Maybe with the exception of crypto, maybe, where certainly in the UK, we had some interesting views there.
Yeah.
But the idea being that with that wider participation, you create more market and pricing efficiency, which is good for everyone, not just in the nuclear supply chain and from their investment portfolio perspective, but for society writ large. So I think that's how we see it. And we hope that people start to see it like gold and other commodities, because it is more tradable, that they can make an allocation that's a little bit different to their equity, fixed income, crypto allocations that they're making right now.
And the token is now listed, you said, on Mexigate.io and
KuCoin.
And KuCoin. And how's that all going?
Yeah. So look, it went as smoothly as I could have hoped for sure, when we first launched. And
Probably not easy dealing with crypto exchanges.
No, it's an interesting challenge, but again, it's about, and ideally everyone would come to uranium.io. But they know there's 90 market stats range, but it's well over 95% of trading from retail investors happens on centralized exchanges. And if our desire is to build the market, you've got to meet the market where it is.
But that's the crypto market, right? If you can have on Mexi and Get.io, that's to trade crypto tokens, even meme coins that have absolutely no value outside of its community. What about making sure that those tokens are available by a more TradFi route?
And so that's absolutely the next stage. So in terms of how we're doing, we did all 3 launches in one go at 9 a.m. BST 2 weeks ago tomorrow. And I was in New York at the time, so that was an early start for me, but that's by the by. And average volumes have held up pretty well from those exchanges. So it's over $1 million a day if you look on the stocks app on your iPhone, if you're an iPhone user.
Right.
So pretty happy with that. We're looking in some of the net buying, which is really all we measure ourselves on, is how many people are participating and holding the tokens.
Yep.
So work still to be done there. But you're absolutely right. We want to tap into these other audiences that this is relevant for. And so then conversations with neobanks and investment platforms in the more TradFi space, everyone saw, I think, the IG adverts all over the tubes, that they're now sort of supporting the buying of crypto.
Sort of to that, they.
Yeah. And so this we feel is a great bridging between full-on crypto community-oriented tokens or protocol-oriented tokens where you maybe don't want to do that research, and you've got a hard asset that you actually can understand a little bit, but you're trading it on blockchain rails. And then the final segment to think about how we've gone to market with this started because it's our home turf, right? With people who've got wallets, more of that Web3 audience that are familiar with trading on chain. Broadening out into what you might call Web 2.5 type of users that are on centralized exchanges. Stick with me here. And then I think the final piece is bridging that gap with the existing retail TradFi audience, and also those institutions. So whether they're family offices or hedge funds, I'd love some of the big banks to be interested. We're a bit of a way from that, I think. But I think we'll get there. And then the really interesting piece, because it's a great sort of, one is a great learning opportunity, and I enjoy that. But also because that's when you're becoming the market, is seeing more participation from people involved in the nuclear supply chain. Because then you're becoming the mechanism for trading spot uranium, because people know they can take physical delivery. Eventually, as we get to that point, we can sort of we then become that reference price we were talking about earlier, rather than relying on third party sources. So
we had one on uranium.io when we had the event. You could only buy the token if you had, was it USDC?
yes,
And then I had to go, and then I gave up because it was quite late after the event. But then essentially you either have to have USDC or have to obtain USDC, deposit into the address or the wallet that you create, and then make transfer.
yeah.
Are you going to make it easier whereby people can buy token with fiat?
But we're absolutely looking at that. So in terms of, we do have an on-ramp provider already. So if you are on uranium.io, you can sign up for a wallet. If you go to your account profile, you can deposit USDC. And one of the options there is to use Transact as an on-ramp provider. We're looking at alternative options as well.
Yeah.
But eventually,
Who's the wallet with?
so the wallet with ThirdWeb.
Okay.
And then the other option that we're looking at is we being, the wider Tezos ecosystem, and Etherlink announced that Jumper had integrated Etherlink. So what that means is that people can come with Ethereum on Ethereum and swap that and bridge that directly into USDC in the wallet on uranium.io. So we recognize that there are a couple of barriers to funding the account right now, and sort of, that is our number one priority, and we should be releasing end of this month, early next, the enhancements to that on-ramping and bridging process.
Because I think that would
Make that easier.
Because when I saw home, I was like, I need to go get some USDC. Okay.
Well, we want to deliver that sort of e-commerce like experience, right? Where you put in your card details and you end up with xU3O8.
The Amazon experience where they make it fewer clicks as they can to make sure that you buy.
Yeah, and that is, I think that's the dream UX for all of crypto, right? We run into some hurdles there, but there are people doing this. It's just about getting that right balance of if you're paying $4.50 for a token, you don't want to be giving up 30 cents in fees to make that seamless experience. We feel that's a suboptimal outcome. So we're just balancing all of that, but expect things to come later this year and certainly before the end of the year.
Ben, thanks very much.
No, thank you. Great chat as always, and thank you for having me.